Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Yesterday, we got a pretty serious signal that there is a recession that is right around the corner. This is what's called a yield curve inversion. So today, we need to discuss what a yield curve is, what happens when it is inverted, what should we do as an investor, and then what should we expect moving forward. So first, let's start with what a yield is, and then we'll kind of build up from there. So a yield is basically what you're getting paid on a particular investment, but in this case, we're really talking about bonds. And a bond is a loan that you make to the US government, treasuries, we call those treasury bonds, or it could be a corporate bond, let's say it's Walmart, and the list goes on. School board, all types of things have bond components to them. And the way I want you to think of it is like this. Let's say I'm making a loan to Walmart, okay? Making a loan to Walmart and saying, y'all need to pay me 3% for 2 years. So year 1, you pay me 3%, year 2, you pay me 3%. And at the end of this, you give me my $1,000 back. Makes sense. Well, let's say I'm looking at a 10-year bond for Walmart. And let's say that in this case, you know, if 2 years was paying me 3%, then in 10 years, you have to pay me more. I don't get my $1,000 back until 10 years from now. And there's a lot that can happen. So I want 5%, I want 6%. Whatever it is, that 10-year rate, that 10-year yield, by logic, has to be higher than the 2-year yield. That is where we get the yield curve, where it goes higher as time goes on. And that logically, and when things are normal, the 10-year yield, that rate is always higher than the 2-year, because I expect to get more for waiting longer, unless I am not confident in the economy. If I'm not confident in the economy, I'm not going to wait 10 years. In fact, I want to get paid more now on that 2-year rate than I would on that 10-year rate. And that's where you get that yield curve inversion, where they switch places. And the 2-year pays you more than the 10-year. That is what happened yesterday. Now, it was really brief. It happened almost like that and didn't make that much news, ironically enough, because the market was up pretty big and nobody talked about it, including myself. I saw the article, but I was, gains. So nobody really paid attention to it. Here's the thing though. When was the last time that the yield curve inverted? That was August 26th of 2019. When did we hit the recession? March 2020. And there are 2 ways to look at this and 2 things that you want to know, or 2 approaches rather, that you should be aware of as an investor. The first thing is, number 1, there is a lag between the day it happens, the day the inversion happens, and the time that the recession actually hits. On average, history tells us there's an 18-month lag between the inversion and the actual recession, and that's a year and a half. That means, what is this, March? So next March plus 6 months, we're talking September of 2023. There's a whole lot of money to be made, and it is not a timing to it. It does not mean inversion happens, sell everything, and wait. That's not necessarily the case. And also, again, that's an average, because August 2019 to March 2020, that was way shorter than 18 months. But here's the thing too, and I'll put this on the chart. These are all the dates that the yield curve did invert and the time we had a recession. But here's the thing too. December 14th, 1988, from the time that the inversion occurred and the recession, the stock market was up 34%. Then again, on May 26, 1998, between then and the time the recession happened, it was you missed out on 39% gains if you sold at that point in time. So yeah, I don't think it is, oh my God, I need to absolutely sell and get out of this, but it is something that you do want to be aware of. I'll also say this too, is that it can happen for really strange reasons. 1998, well, that was a dot-com bust. Right after that, and what was it, 1999, 2000, 2001? Okay, it predicts weird things at weird times. When we had what was August of 2019, it was a virus. So we don't know what it is going to be, whether it's going to be political, war, tech, who knows? We literally do not know what that thing is going to be. But there are some things that you can prepare for now, and some of it you should have already done. So remember, in 2020, if you go back and watch those videos, Instagram, all those kind of stuff, I was really big on defensive stocks. I was really big on what they call recession-proof stocks. I haven't really gotten out of a lot of those. Costco is the biggest one I keep telling people about. I'm like, hey, I'm sticking here. I'm sticking with Costco. Should there be a recession, you are still going to buy groceries. We did a whole segment segment, a month ago or maybe 2 months ago, a whole video rather, about defensive stocks and what areas of the stock market make sense when things don't go well. Healthcare, because you still need it, and they pay good dividends. And we talked about dividend stocks and dividend ETFs. All that stuff still makes sense. So I personally, and again, we all know what's going to happen, I'm really not going to make too many moves because, one, it could be a year and a half. So there's a lot of stuff that I can decide to invest in between now and then. There's not a time to panic. But also, I know for a fact, I'm probably not going to sell Costco. Okay, I'm just probably not going to do that. And I might go look for some more defensive stocks between now and then just because they were doing well. Like Costco, for one example, and even Kroger, especially recently, they've done well. So it's only going to serve me to get in now, continue investing. Should a recession happen, which I hope it doesn't, even though this is a very reliable indicator, they're going to do even better then. But this is the time. This is the time to start to make those little adjustments and just have these things in your radar should that occur. The other thing that you should be looking for and be interested in is it could also be an opportunity for you. I wish I was smart enough to go back in time and invest in stuff like Tesla when the market absolutely crashed in 2020. That was the time to get it. That was the time to scoop up all you had and get into it, because if I remember correctly, I think Tesla was up like 400%. I think it was 404%, some 400 crazy number that it was up back then. That's not a guarantee it's going to do it again, but I want to have some cash on the side for it. So I'm still going to be dollar cost averaging. I'm still going to be, evaluating my stocks every 6 months anyway. But just like I told you earlier, because the market was kind of finicky, if I'm putting in, let's say $100 in my account every week, I'm dollar cost averaging and taking 100, investing 100, I might put in 100 and maybe invest 80 and have a little bit more. Put in another 100, invest 80, and have some cash in reserve so that when and if this occurs, if it's 18 months, it's 18 months. If it's 5 months, it's 5 months. And I have a lot more cash available to invest even more aggressively should that happen. Now again, I also don't know why my nose is so itchy every time I start to record. Maybe it's the light. I've been doing a lot of presentations. Anyway, aside from all that stuff, having that cash ready, because I know, right, I have a signal, it could be between now and the next 18 months on average, just preparing. Not panicking, but preparing. And the process still stays the same. I'm not getting out anything until June. When I hit June, I'll look around and see what's going on and how the market is responding, what the market is doing, and then make a determination then. I'm telling you now, the yield curve inversion has happened. It was very, very brief, but it did happen. And the last time it happened, and the time before that, we did have a recession. This is not a panic time. This is a prepare time. This is a time for you to just be aware. And again, up until today, because the market was down, again, it was up 11% in 11 days, 11 trading days. So there's always perspective here. I'm still focused on long term. I'm still looking at quality stocks. In June, I'll make those adjustments, but you do want to be aware of it. If you don't have a good dividend stock, an inflation-proof stock, I put that in quotations, this might be a time for you to at least do some research and then hop in when you feel good and ready to do that. Outside of that, I don't really see any major holds in my investing account right now. Maybe I feel a certain way about Capital One, a company like Target. This makes me feel, and again, feeling, we'll see what happens in June. This makes me feel that I would hold on to something like Target, because if that's the case, Target is a little bit defensive. It does pay a dividend. People gonna shop there regardless of what happens. So maybe I'll hold on to Target, even though it hasn't treated me the way I feel like it should. But that's me thinking out loud. Come June, we're gonna holler at me then. Okay. All right. So just wanted to let you know that's what it is. That's what a yield curve inversion is. What happened the last time it happened, and other things that you want to know. Again, don't panic. You still got some time to make some money. So definitely do, but also be ready to protect your portfolio and have a plan for doing so. I'm going to tell you this right now too. Last time this happened, in 2020 in March, people were talking about selling their 401k and doing all that crazy stuff, and then you lost money and didn't come back. Don't do that this time. Okay? If we hit a recession, you know what to buy. I've talked about the defensive stocks, but also don't panic. Selling is not really an option. And if it is for you, then you need to reevaluate your life. You need to reevaluate your portfolio, because those are the times that you should dollar cost average. Those are the times that you should buy and hold until things repair themselves. Okay? So just want to throw that stuff out there. That is it for me. I will talk to you later. Bye. Bye.